So I didn't think I'd actually be making a video about this, but State Farm just lost $14.1 billion in 2023. That's massive. Will they go under? What's happening? Let's dive into it. So you may have seen all these articles, State Farm's losing a ton of money, and I do a lot of videos about them because they are the largest or second largest insurance personal lines agency or commercial and personal lines agency out there. They are a massive company, and they actually are worth about 134 billion as of today versus the 114 or 124 billion. We'll dive into the numbers, but they have grown significantly. So why are they okay with losing the 14.1 billion? Let's dive into the numbers and just get some summaries of what's happening. Now, technically, that's an underwriting loss. That's the total overall underwriting loss. But you got to remember, they invest the money. They have different new clients coming in. They have renewals and all of these things that are popping up later that are going to play a factor. And this is across 14 different companies that State Farm owns. These are different P&C, property and casualty companies that they work through. Everything said and done, their actual net loss was $6.3 billion. Still, to me, astronomically, I would like a 0.5% of that, please. I will go retire and make more insurance videos for you for fun. So let's pull up and actually read some of this stuff. The reported earned premium was $87.6 billion. That's a combined underwriting loss of $14.1 billion. That was compared across those 14 companies. In 2022, they had $74.3 billion that they had earned with a loss of $13.3 billion and $13.2 billion in losses. So they've actually had a lot more losses, but the percentages to the gain to the loss are actually doing pretty decent. They're right on par with what they've been doing the last several years. The trick is they were profitable with auto, which was a little bit shocking because they were very restrictive this last year with the type of auto that they take in. So what we're seeing is State Farm is seeing the losses in the home insurance. The home alone was $4.7 billion in losses of underwriting. So that's a third of all of the losses. You got to remember, their auto, their home, their commercial, their life insurance, all of these things that State Farm does, a third of it was just the homes that they wrote. And because they've added 3 million new customers, they're starting to see the fallback of that. Back in 2022 and 2023, they had that many customers that now have had these catastrophic claims, hence why they've left a couple different states and are no longer writing insurance in certain states. It's because they can't afford those natural disasters if they aren't planned out correctly. They profited in one sector. They started pushing life insurance. You're going to see a lot of the Farmers agents, the State Farm agents, the Allstate agents, maybe even Geico and Progressive one day. I don't know. They don't. But those are the three main ones that you're going to see are going to push life insurance. That's a big moneymaker for companies, and they've honed those products in, and they usually have set numbers for the agents. So if I owned a State Farm agency, I have to write so many autos, so many homes, and now I have to write so many life insurance policies. It's really always been that way, but now I have to write more life insurance than I did before. And you can tell based on the numbers, they profited $1.2 billion off of life insurance. Their CEO did mention, although they did improve the auto insurance, they were a little bit happy with that, sort of. They're not where they need to be. They're not in a position where they're going to make a profit because once again, it's a lot of these companies like Lemonade, where they just get a bunch of investors and they put a ton of money into marketing and advertising, and they get all of these clients. And there's usually a good price initially, but then when the claims start rolling in and you've written so many customers, and if a third of your customers start having claims, you're not going to make money. And then you need more investors to put in, you need more money, and you need to grow it. Because if you stop growing it, you're just going to lose everything. The only way to combat that is to raise the prices. And that's what we're starting to see, where they have in some states raised the prices drastically. There's a few videos on this channel that go through that. But they need to sit back and say, whoa, wait a minute. How big did we grow? How much can we sustain? Can we even handle this much business? You may see some layoffs because of this scenario. If they don't get the pricing to where they need to be profitable, they can't sustain this for a long period of time. Now, don't get me wrong. They're one of the most stable companies out there. It's very unlikely that they're going to be injured. So if you're with State Farm, I wouldn't necessarily worry about that part of it. I would worry more about what they're going to do to fix that part of it, because that's going to come out of your pocketbook. Also, for employees that are working there, There's going to be town hall meetings where they are going to explain different changes and different technologies. One of the larger things that a lot of companies, and I assume State Farm is implementing as well, is the AI ability to check underwriting. What we're starting to see is a lot more non-renewals for those kind of gray area homes and gray area auto policies, to where there really wasn't a yes or no, it should be covered. They're going to get a little bit more specific with that. That means more aerial view photos. Is your roof streaking? Is there trees hanging over your house? If that's the case and you're a customer with them, I wouldn't be surprised if your next renewal, they show you a photo above your house from the sky that says you either fix this or you're not with us. It makes sense. They can't afford the losses, and if that's the case, they have to cut the negative business, they have to raise the price on the mediocre, and they have to slightly increase the price for their top tier business. It's crazy because you have your other companies like Geico that actually are showing profit. There were a few companies this last year that showed a profit. Part of the reason that being is the type of model of insurance that they're offering. We can sell you 3 million customers, but if you sell them the better coverage and they have a lot of claims, that's one thing. If I take that 3 million customers and I sell them the lower coverages, I make less. But then even if you have a claim, I'm not paying a ton out. That's why that independent agent is a focus for a lot of people shopping. That person gets to check around different companies, and when you're not a fit with one, they can always pivot you to another one. Now, there's not always the better one because they usually try to put you with the best one initially. And if the prices start to creep up a little bit, that's almost expected now. So yeah, there's not always going to be that guarantee that they're going to save you the next renewal. And if you're shopping every renewal, they don't even want you as a customer anyways. That's not the design of it, is to just bounce you around from company to company, because they know that there's discounts being lost by doing that. Let me know what your thoughts are. What do you think State Farm is going to do to try to come back from the losses that they had? I'm Mark with Think Insurance. We'll see you in the next one.